Good morning, and thanks so much for tuning into the Trade Setup. I'm Neeraj Shah. Let's take stock of what's happening around the world markets and the cues for our trade. The US markets, now this is the other cues, of course, the global cues. The US markets, firstly, the Dow had a bit of a stick, about 0.7%. The Nasdaq was fine, but no big shakes. I'm just about doing okay. This is the US markets, of course, yesterday, and not on Wednesday, on Tuesday, really. And the other cues are fine. Global cues also steady as she goes. The SGX Nifty, the last time that I saw was at 6:30 a.m. was very flat. Be interesting to see what it does right now, but I think it should be flattish to marginally lower maybe. Now, what's the global news flow, right? The US futures and the Japanese shares, at least when they started off, inched higher before Jerome Powell's verdict. Perceived hawkishness. Who knows? No, let's stick with the global news flow first, please. So the US futures were in the green and Japanese shares were inching higher. Oil dropped with the China demand outlook and Powell remarks in focus. India has cleared the Micron 2.7 billion chip testing packaging plant as per Reuters. And Pakistani court has issued an arrest warrant for ex-Prime Minister Imran Khan. Now, amidst all of this and the fact that the US futures are marginally higher, what is the trade setup for our day? Well, if you just look at it, Nifty, I think, has taken support and bounced from that 18,660 kind of zone twice in the last 2 days. And therefore, for any kind of downsides, this 18,600 to 18,700 zone becomes a key positive. Remember, yesterday too, with the 18,700 put option remains the key pivot, which is kind of stayed there. So no big dramatic uh, pullbacks that you are seeing, and those pullbacks are getting bought into, which is a good thing. I mean, surprise, surprise, Friday it was the bank Nifty which gave that bit of a support. Yesterday, a bunch of other sectors, including IT, came to the fore. So there's a bit of buying that is happening, and the bottom buying in banks is certainly helping. The only problem with banks that is difficult to predict is sustained uptick. Let's go back to the trade setup plate, please. So one is, of course, what the Nifty is doing, and the other part is what the Bank Nifty is doing. And you're seeing that the Bank Nifty sees some buying at lower level. The only problem is that it's difficult to predict a sustained uptick. Broader indices, though, continue to increase for the sixth consecutive day, and therefore the broader markets are not really doing any dramatic kind of downtick, if you will. That is doing okay. So that's to be kept in mind. And if metals, diagnostics, and insurance stocks were looking strong, auto ancillaries also came to the party in trade yesterday. You saw some bit of IT participation as well in trade yesterday. So all of that is looking okay. Now, Prime Minister Modi is in the US, and there is lots happening out there. So, you know, just hear me out first, and then I will get you the GQG note. So Elon Musk said that Tesla will be in India as soon as humanly possible. As I said, India has cleared that Micron plant. Google is scouting for suppliers to move some pixel production to India. And clutch of global large CEOs are going to meet Prime Minister Modi as well. In fact, GQG Partners, which made that large investment into the Adani Group as well, has put out a note apparently where they're saying that and they are quoting their bullishness for India. They're saying that we've been increasingly disappointed with the recent policies implemented in the developed world, such as endless stimulus in both the US and Europe, regulatory crackdowns in China, and even nationalization in France. In contrast, we believe India stands out with its move to become more pro-business. Well, if anything, almost the thing is a lot of right noises being made around India, a lot of right noises being made for India, geopolitically and otherwise. Uh, we are in fine shape. Let's hope that the party lasts. Now, amidst all of this, what are the stocks to monitor in the session today? That becomes a key thing as well. I'll start off with the large caps to focus on. So Z Entertainment is in focus because it was trading at 52-week lows yesterday. And there's a newspaper report today which speaks about how Sony is committed to the merger. The story reads for Z Entertainment that Sony Corp has no plans to back out of the merger of Sony Picture Networks with Z Entertainment, despite allegations of funds diversion made against the promoters by the Indian markets regulators. Sony remains fully committed to the merger in its original shape. Three people with direct knowledge of the matter said amidst market concerns over the fate of the $1.5 billion deal. Well, if this were to be true, then it's a positive for Z Entertainment, and it could give a bit of a breather to the stock in the session today. So it's a stock at 52-week lows, could get a bit of a breather. Cummins is at 52-week highs. Amongst other things, Cummins Global is talking about a very large investment in India ops. Now, you would presume that will all happen through Cummins, the listed entity, and therefore that should be construed positively. Interglobe Aviation is the third large cap in focus. So, amidst all these highs that they've done, brokerages have turned out very, very constructive on the landscape, on the next few years for Indigo. And in fact, in yesterday's session, after they announced that large deal, before market open, of course, Citi opened a positive catalyst watch on Interglobe Aviation. So do watch out for that one as well. Then some newsmakers, Dr. Lal PathLabs, Metropolis, Thyrocare, Krishna Diagnostics. The government has raised test prices, and there's a revision of CGHS rates for 36 radiological and imaging investigations done as per a government notification yesterday. This should be positive for Dr. Lal, Metropolis, Thyrocare, Krishna, and the stocks have done really well in the recent past. So do watch out for these names in the session today. HDFC Life is in focus. CCI, the Competition Commission of India, has allowed HDFC to acquire certain additional shareholding of HDFC Life through one or more on-market purchases over stock exchanges as part of the mortgage lender's ongoing merger with its banking unit. Suffice to say, if people were not constructive on HDFC Life earlier, then now there's a technical reason to be constructive too. Now, people might say some bit of it is in the price. I still think there is momentum in favor of HDFC Life, so do watch out for that one. In fact, speaking of life insurance companies, Jefferies has come out with a note on ICICI Pru Life today. They have raised the stock to a buy, with the target price being raised to, sorry, the stock is a buy, the target price has been raised to 640. They said the growth pickup is key agenda. There's a scope for valuation to re-rate. Experience of the new CEO as ICICI Bank's head of retail banking should benefit the company. The improving distribution efficiency and customizing products is the company, according to Jefferies, and all of this could augur well for the stock. So do watch out for ICICI Pru Life today as well. Shriram Finance yesterday was up about 5%. Now there's news that Piramal Enterprises fell entire 8.34% stake in the company at a floor price of 1483 per share. That's about a 5% downtick from where it was yesterday. So do watch out for that one as well. What else? Okay. Rail Vikas Nigam was in news yesterday because of a cancellation of the contract with the Russian company, Russian counterpart. And the companies clarified once that the JV, the breaking of the JV between RVNL and TMH is factually incorrect because the MOU is still valid. Also, they've received orders worth 4,058 crores for the construction of metro stations in Chennai, and therefore RVNL could be positively impacted today. GR Infra Projects is the other one, which has received an LOA for a project worth 1,085 crores, and therefore that too could react positively today. Motilal Oswal has put out a note on Blue Dart, and I mean, the rationale is pretty interesting, or you could say, for lack of a better word, convincing. They have upgraded the stock to a buy. The target price is 8,040. Now, what they are saying? They are saying that the lower ATF prices will support margins, and aircraft addition will boost volumes from the second half. Market leadership in Air Express, focusing on increasing market share in e-commerce. They expect Blue Dart's EBITDA margin to rise to 13 to 14% from the current 10 to 11%. That's a very sharp uptick from the second half onwards. And they expect Blue Dart to clock a CAGR of 14%, 21% and 26% in revenue, EBITDA and PAT during FY23 and 25. Now, usually these stocks are expensive, but I still think that this is a very constructive outlook on Blue Dart. If the management were to verify this, and we have placed the request with the management, if they talk to us, we'll get the interview as well. But if this were to be verified, then this should be construed positively. Maybe Blue Dart will react today as well. I'm trying to think what else. So now, the stocks of Tesla coming to India, could some companies benefit? I think a lot of names out there would be out. Cyient DLM IPO will open on the 27th of June. This will be positive for Cyient as well, so got to watch out for. Amneal has received 505(b)(2) NDA approval from FDA. Shilpa Medicare is a partner here, and Shilpa Medicare has also announced the rights issue, made the rights issue announcement, so do watch out for that. Goldman Sachs has a buy on HDFC Bank with a target price of 2050. And Jeffries is a buy on Reliance with a target price of 3125. So lots of stuff to watch out for. Let's wait and watch how some of these stocks react. Lastly, what caught my eye, amongst other things, was this. So Lanxess has lowered their EBITDA guidance for calendar year 23. It's a global specialty chemicals company. They expect the weakness to continue in the second half of 2023. Citing the weakness, they have lowered the EBITDA guidance sharply to euro 600 to 650 million for calendar year 23. The earlier guidance was 850 to 950 million. And the CEO of Lanxess is on apparently record saying that generally weak, very weak demand combined with continued customer destocking effects already seen in the first quarter lasted into the second quarter and are ongoing, especially demand weakness in the construction industry and some others. A recovery within a month of June is not visible. The demand recovery we originally expected in the second half is not yet visible, neither in China nor in other meaningful end markets. Well, if this is true, then it could spark a concern for some of the Indian chemical companies as well, which are heavily into exports. So I think that is to be watched out for. Maybe not niche chemistry, but some of the others for sure. So please be mindful of that. Touch of conversations today. Prime Minister Modi is in the US. We'll talk to Mr. Nilesh Shah of Kotak AMC on that. 10 a.m. Andrew Holland Johnson on Talking Point to talk about whether he's constructive or whether he is slightly circumspect. And the mutual fund show at 4 p.m. with Pravleen Bajpai and Karthik Shah to talk about overlaps in mutual funds. So that is to be kept in mind as well. Outlook on cement prices with Hetal Gandhi of CRISIL. But I would urge, if you can take it a plate back, I would urge people who are looking at mutual fund investing to log into today's show. We're talking about the overlaps in mutual funds and how you can avoid that, or what are the best ways to ensure that your mutual fund holdings don't have such a large overlap that you unknowingly become extra overweight on something that you don't want to be. It's an interesting topic. You might want to tune in for that. And thanks so much for tuning into the Trade Setup. Have a great day ahead.